Good afternoon, everyone. We would like to welcome you today to this 9th policy lecture in our Trade Dialogue series. Our speaker today is Professor Eskil Ullberg from George Mason University in Virginia. Eskil holds a PhD in economics from the Royal Technical Institute in Stockholm, although he has done most of his research in the US, if I understand correctly. He has also worked as a senior consultant to firms, IOs and governments over the last 20 years. And he just told me that, in fact, the government of Sweden is kicking off a project with him, of which he probably can tell you more about. Today, Eskil will discuss the role of organized markets in facilitating the global trade in ideas, in particular the role of trade in ideas as a new development policy. And he will also, of course, discuss the policy implications of his research. I would like to warmly thank Eskil for having accepted our invitation to come and present the results of the state-of-the-art research in Geneva today. And in terms of format, as usual, Eskil will speak for about 45 minutes, after which there will be a Q&A session. Eskil, the floor is yours.
Well, thank you so much, Victor, for this very nice introduction. I'm very happy to be here and to be able to share these ideas, and hope to have some sort of discussion afterwards also with all of you. So please take some notes and be ready for the questions. Okay, so the topic, very well formulated here by Victor, is this dimension of North-South trade in ideas as a new development policy. So it's a focus on the exchange of ideas. So it's the problem, since academics, as you know, they are very focused on problems, right, and to try to solve them. And so the problem here is leveraging the human capital formation that has taken place so much in the last decades through markets in patents. Right. Yeah. So what happened in Venice in 1474? Well, the first known patent system was started, right? And the intellectual property, and it was also the first intellectual property rights system, as we know, was created. And it changed the economic policy of the time by honoring the inventor in law. Okay? Before, the inventors were not very honored. So it busted the guilds. That was the purpose. The guilds at the time, as you know, if you read Shakespeare and others, they were sticking to technology with the draconian measures, and they wanted to open up this exchange of the ideas, and the fierce opponents to this law was the guilds. And the idea the economic idea was then to make ideas commercially tradable and socially shareable, so they were not trade secrets. So it opened an avenue for an alternative to trade secrets, and in an open market. So in a sense, you can say that sort of personally, technically ideas that they were sitting on, they became impersonally tradable in their own rights through this early manufacture that took place. So the question is then, what does it mean for economic development? And how big is this? So I'll give you another slide, just sort of intro slide. So since 1883, as you know, the Paris Convention, which is still the convention or international convention for patents, you have a global market essentially. Now, why is this important? The profitability of different assets. You have financial assets, you get about 3.5%, physical assets, manufacturing and so on, 7%, and intangible assets, of which intellectual property rights are part, 11%. So it's much higher return on the intellectual assets. The human capital has a higher return than the physical capital and the financial capital. That's why it's important. And the WTO here, who has very nice statistics and getting much better all the time, I must say. They have a story out here on the IPR, all the IPR licensing, which I know how you captured it, but you managed to do it. In 2016, it's $329 billion, so it's not zero. And very importantly, it's about 1.5% of world trade today, but that's up from 1% 10 years ago. So it's up 50% in 10 years. This is a serious change in policies. And these are monetary licensing. Now, there is a lot of cross-licensing going on, so maybe this is 5 or 8 times bigger or even more. Now the top 20, just to give you a flavor of who are the players today, before we go to the North-South dimension, United States 39% of these licenses, EU 34%, Japan 10%, Switzerland 6%, and at the top 20, at the bottom of the top 20, you have China with 0.3% and Israel at 0.3%. So that, which is $1 billion roughly, right? So here you see something quite interesting, right? Here's a country which is 1,300 times smaller, and it has the same revenues from intellectual property. Right? So that tells you something. It's like an indication of the power, the potential economic sort of dynamism of trading in ideas. And since all nations, are made up of people, and all nations, if you go to any nation, you have all these statutes of all these fabulous people in every nation. So every nation has these fabulous people. So this sort of potential is available for every nation. It's not just the nations who have raw material and so on. It's because it's this human capital. Now, and also interestingly, you can see that if you add Switzerland to EU, you have about 40%. So Europe is slightly larger than the United States, and this has to do with history, I think. But Switzerland, where we are now, 6%. This is a very tiny country, which is an absolute giant in this field. So this, again, pushes this story, right, that there's a huge economic thing here. Now, what also happens, as you are aware, I'm sure, that South inventions, we've got to move to the South, they come back to the North now. So there are inventions made in the South together with the companies of the North. For example, again, Switzerland works with South Africa and others, and they develop technology together, and then it comes back to the North. So there is this sort of beginning of NorthSouth Exchange, and that's what I'd like to talk to. So what these firms do then, to create such, what do they do to create such a trade? This is the story here. So the talk will be along these lines. There is a document at the end, by the way, so you can read it, bring with you at the door. And then there are also the PowerPoints, I think, are available. And also this talk will be available, so you can get all the details. I'll try to get through all these things in a reasonable time. So the first thing is the basis. We look at what is the basis then for this exchange. 2 studies that I've worked on that I will present. One is an experimental study on coordination to how you find the best, what are the issues regarding finding the best technology, which then creates the highest growth. And then the other study is an empirical study, what firms actually do who license patents, how they create this trust in each other's actions when it comes to overcoming all these uncertainties and so on. Then implications for institutional taxation and education policy, particularly in the North-South Exchange around. And finally, some practical conclusions. As you already mentioned, there is a program just got funded by the government of Sweden to do a first pilot study on what is the economic potential of this kind of trade for developing nations. And also, we have a practical approach here to try, actually, it's a proof of concept. So first, with the exchange of ideas. So I will comment this which is also in your handout at the end. So you can say like this: Einstein, then, the sort of the iconic scientist and insightful physicist who reshaped the worldview of us in the world. He said once, where you need 1% imagination and 99% perspiration to get it done. Now, markets in patents, meaning new publicly disclosed technical solutions turned into tradable assets, they ameliorate on this understanding of nature and are based on honoring the creative minds of inventors in society, discovering not natural laws like Einstein or resources like ores and so on, but solutions to technical problems furthering their use. So the patent system then can be seen as providing a key mechanism in integrating science and technology. And that key concept was what made the second economic revolution possible. This integration of understanding of nature and applying nature. So this allows then, this integration, to produce with fewer resources, higher productivity, and that's sort of at the heart of our economic development. So this is my take. Maybe it's strong position, but I think that the patent system really has this important mechanism between science and technology that is really has contributed a lot to this success of the economic development. So in the end, then you get more socioeconomic gains for less use of the environment. So the environment then ends up in the denominator and the socioeconomic gains in the numerator. These inventors and innovators who make use of this new technology or non-technology, they are like rare flowers, and they only make up a small portion of the world's population, but they have huge impact for everyone. So think of just Watt's steam engine, all the way to solar power, big computers all the way to big data today, chariots to planes and beyond, medicinal herbs in the Middle Ages and earlier to smart medicine. But how do we capitalize now on these maybe 1% of ideas for the 100% in a fair, equitable, honorable way? Well, we use companies, create products and so on, universities who teach students, but we also have markets in patents and other IP, exchanging your ideas for others' ideas, creating a more productive solution. So, but however, honoring the inventor has not always been the norm in this game. We mostly imitate and steal from them, as the ideas are often easily copied, although substantial toil has been put in to arrive at these solutions. But in 1474, as I mentioned, it became the first known patent law in the city-state of Venice, attracting external inventors to their their inventions, essentially creating an impersonal international market in technical ideas. And just for sort of a fun fact, that the first patent was actually granted to a German for pump technology. So it was not Venetian technology, it was not this in-house, homegrown technology. It was this trade in idea, it was this import of technology. That was sort of the idea with the patent system, to get hold of other people's technology. So moving slowly now through the centuries in Europe, the patent system rejected royal monopolies and privileges wherever it went, giving the rights to the true and first inventor. Now, why did this happen? Well, because it was a recognition of the fact that it's not simply the natural resources that counted for technologies, turning sand into water, and then that the desert bloom when water is added. And this economy then bloomed first in Europe, then America, Japan, in this chronological order. And now most of the part of the world, notably China, Israel, India, South Korea, Singapore, Vietnam, and many others. These are sort of big movements in these countries. And that's thanks to these imported and traded ideas. And some of these patents, some of these ideas, and not all of course, but some of them are patent protected, making then the patent system an instrument of economic development based on exchange in human ideas. So this is sort of the background, and you can study this further. So now I'll move on to these research projects, which are more trying to get your head around, or at least get some facts, some understanding, deeper understanding on what mechanisms would it take now to, how do these mechanisms work really when it comes to developing technology. So the first one is the willingness to search for new technology. In order to find technology, you have to do experimenting, searching, and investing in research and so on. It's not doesn't grow on trees, and this is the reason here of this study. But as you, the economists of you know, technology is almost always treated as an externality in economic theory, area and so on. It's like the air or the grown trees. It's like an external force. So the economic analysis focus very much then on using the technology that is there, right, for productive use, not producing the technology. But this talk and the studies are about producing the technology, which is a very, very complex and highly dynamic story. Just think of Edison, as famously when he made the bulb. I think he did 1,500 experiments or something like that. That's not something that easily comes across. It's something that is very, very dynamic. Now, to study this, I've chosen a method called experimental economics. I'll come back to that in a second, which studies what people do given certain rules. And we will look at both the institutional impacts and how patent systems impact it. So technology then drives productivity. I should stick closer like this. Technology drives productivity. Thus, the understanding of this selection process better, if we understand that better, that may shed light on which institutional and taxation policies we should use to make more productive economy, right? So the focus here is on understanding the mechanisms. And just to brief, if experimental economics is sort of new to you, what we do is put people in a room like here, like you, and program an experiment. In this case, it's about patents, and you have your computers, and you trade these contracts on patents according to certain rules that we want to investigate, and then you look at the outcomes. So we are investigating human behavior, right? We don't assume that everybody's rational, and so on. We just study their behavior. And what we can do then is compare then, is this way of trading better than that way or in this way? So you can compare then these kind of systems. You can't, optimally define something, but you can compare something. And in this case, this experiment was built on the principles of the patent system and the practices that what firms actually do. So it's not this externality, it's not this assumption that is there, it's not some abstract formulation of the patent system. It's the actual principles of the patent system that are involved and the actual practices that people use put into this system. So in this way we can then learn a little bit about institutions. Okay, you still with me? So now we'll go into the experiment. What's important to understand here then is sort of the concept of how we think about it. So to the left you have then the hierarchical approach, right? You have inventions and innovations in the same firm, right? You have the research department who works with the market department and the production department and so on. They do it in-house, which has been sort of a common way. But increasingly, and already from the beginning, 500 years ago, you had this collaboration instead of one invented it, one developed it, used it and so on, the innovators. And then there were these traders who were very good at trying to help out and use the same technology in different places. And how do they coordinate? Well, in this experiment, they coordinate through a market with prices. So they are buying and selling these contracts on these rights. So the study is then, okay, so if these are coordinating, then ultimately then you can think of this coordination as a North-South coordination, right? It doesn't limit any kind of coordination. Then we can learn something about the potential. And this is what it looks like. You have the trading screen, you can buy and sell these things. And in this experiment then, we want to particularly be interested in selection of technology. How do people arrive at the technology that is the most valuable or most productive? So in the game then, they introduced this little symbol here. You see the 9 dots here. So in this, they can choose one of these 9 dots, and under there are values, very broad range of values for these technologies. And this symbol that is not just taken out of the air, this is actually the largest, or one of the largest patent licensing and technology producing firms in the world. They showed me once something like that, how they think about this. They say that, okay, we are in 5, position 5 here, for example, and they say, okay, maybe we should go to 2. Many people are going in this direction of new technology in the 2 direction. But on the other hand, there's a lot of competition then there. So maybe we should go in the 6th position here. Go in another way to find something new, and maybe that's better for us. So they are actually thinking in these terms. Which technology should we develop in this kind of way? So that's why it's implemented like that. And the question here is then, how do you, in the experiment, there are different values, right? And one has the highest value, of course, and you want to see, are they willing to search and search and search, keep on searching to find this highest value or not? Or are they just happy when they find something? And how long time does it take and things like that? And these are, so now I jump to some of the results. These are maybe not totally easy to see, understand these graphs, but the answers are, I think, easier. So this shows, now on the left side you see you have these selections, 1 to 9, and this zigzag curve. See now, is it this one? How do you point to this? Oops. Is the laser? No. Yes, that's it. Okay, now I find the laser. Okay, so here you have the selection. You have 1 to 9 here, and then what are they trying? You know, first they're trying number 1, then they're trying this, and they're trying all these things, and then they discover by what the buyers are willing to pay for this. They discover, you know, what they should do, and they act sort of rationally, right? They tend to discover the most valuable one, and the valuable one is this line here, which is number 4. They don't know that, of course, but they discover that in this process, and you can see that it actually does sort of converge to something. So you see that they are able to do this thing. And how willing are they then to search? How broad are they searching? So this is the way we looked at it. We looked at the last 5 trials, if you like. So first you see that they are trying a lot, right? Of course, naturally. Oops, it's the wrong button here. They initially try, and then after a while they see, maybe this is the good area. So then they just sort of focus a little bit, but then it jumps up again here. So you see that there's a sort of a trial, but doesn't really go to one. They're uncertain whether this is the best. Although they tried, they're not sure that it's the best. So they try again. So you see this kind of thing. So what I want to do to show with this one, you see this curve here. It's like 20 or about. This is like 20 or 25 years of time it takes. So then. This is one example of that. So now we're looking at 6 different tests. So we tried this for 6 different conditions. So in this graph, it's on the top 3 here. This is with strong patents, and the lower we have weak patents tried, patents that do not hold up in court, and the stronger they hold up in court. And then on the other dimension here, you have the institutional arrangement. The left one here, it means they're selling a sort of a take it or leave it way. They say, the inventors say, I want this much, take it or leave it, you know, and the buyers say, okay, yes, no. And it's very not really negotiation. It's just a very linear fashion, which is very similar to what's going on today. That you sort of try for a yes. And the second one, you give it a chance. You tell the inventor tells the buyer, okay, I want this much fixed fee. And then let's negotiate about the royalty. Okay? And then the third one is, okay, I'm willing to negotiate both fixed fee and royalty. Okay? And which is, these 3 modes are the way people actually do things. Right? So we implemented that. Now, what can you say about that? You can say that the first one does not converge. Okay? So you never arrive, it seems to be, at the best technology. If you just do what most people do today, you say, let's take it or leave it. But you do arrive at something, the more it seems, it's very noisy, if you like, environment, right? It's a very complex environment, so it's very noisy. But you tend to see here that if the buyers are able to express their willingness to pay for both the fixed fee and royalty, it seems to be more converging better. They're actually finding this. And there's actually some statistic here, which is quite instructive. Now, it's a complex environment, right? You can argue that there are faults in the designs and so on. There are some, but it is based on the same principles, and the results actually are significant. So what we see here on these green circles is that the validity in this institution, if you remember, there were 2 things we wanted to try, right? Which in mechanisms are useful, and strong and weak patents, validity that's strong and weak patents. These are the main dimensions. So we see here that they are significant, but institutions matter much more. I mean, the validity doesn't matter. The strength of the patent does not matter when it comes to the willingness to search for new technology. That's quite interesting. But what really matters is the institutional arrangements. So this puts now sort of this discussion on policy a little bit different. It's not just how we tweak the patent system, right? We should, of course, have a good patent system. It becomes more like an entry ticket. What is more important is how are the trading rules. That's why I'm extra happy to be here at WTO, because this is, of course, the forum where you discuss trading rules. So this is, an opportunity. I think this is actually an opportunity to rethink some of these policies. What do these trading rules say about patents here? Not just the decades we spent with the Doha and the very deadlocked positions on the path, which is about enforcement mainly, if I understand it right. So this is more about the win-win situation. What are the gains available here? So that we see here then, that institutions matter more. And what matters more? Competition, the number of buyers and sellers matter. And at the money price, this means that how rational how efficient the prices are. Do they really, from a social perspective, do they really cram out, the surplus of this gains or not? So that also matters. But what doesn't matter then is the patent strength when it comes to search. Now it is a noisy environment. It's not very high R squared here. But it's indicative because of this clear cut between validity institutions, and there are like 247 data points. So it's I would say that one can say that institutions are more important. Now, so that's the sort of the main message that the institutions really matter, and then there are two more sort of findings here. Institutions matter more than the patent system when it comes to the efficiencies. That's what I mean. So this is, if you look at this search behavior, you find some kind of interesting behavior here. You see all these kind of peaks, right? They never seem to be happy. And if you draw a little line through, you see that it's sort of, if they look, and rationally, if you look through all the 9 possibilities, you should stick to the highest value, and then you should be happy with that. That would be the rational behavior. But that's not what happens. They somehow distrust the others, or they are not certain that the others have really given the best information or something. So they try again, and then they find the same solution, same optimal solution here, and then they try again, and so on. So they go on and on and on, and this stretches out the time, a lot through 30 rounds here, at least, before they arrive at a technology that is useful, the best technology. That's a long time, so we'll come back to that. So what that does mean? It means that if these are like years, 30 years, patent life, typically economically, on average, is about 7 years. Now, if you want to earn money, you have to have at least half that time, 3.5 years, to earn money. You have to arrive at the best technology for 3.5 years, then you earn money on the 3.5 years. So what does it mean then? It means that you must have multiple projects. You must have parallel projects. You have to run all these 9 at the same time, right? And this is the very important thing. It's like a serendipity finding in this report. It's only the largest countries can do that, right? Small countries can't afford to run 9 major technology initiatives. So it means that all the others have to collaborate. Right? This is a completely unexpected finding from this experiment. And how do they collaborate? Well, through the patent system. Right? So these are the major conclusions from this study. So institutions matter more than patent system for the willingness to search. Patents are like entry tickets, and then you have to improve with this. And why do they matter more? Well, it could be better price precision, could be better competition, and so on. This could be further investigated. And then this fluctuation of search, this is something we don't clearly understand. We have to look at this deeper. Why aren't they happy? What's happening here? It could also be this, that the prices are a little bit uncertain. They're not uncertain. They got the right price and so on. And that's why you have these fluctuations. And then this, what I call serendipity finding, then that only the large countries can do this themselves, and the others have to cooperate. So then it means now, in WTO terms, rules for cooperation at national level between firms, universities, and other tech producers. Right? That will help now. You can help all the small countries to collaborate by working and developing, testing, experimenting with the trading rules at the national level, how this can happen. So the conclusion of this first study in the policy is that you need a dual policy. You need both understanding this institutional policy dimension of it very much deeper and what it means, and the educational policy, which all of you have been investing in for last decades. And there are hundreds of millions, of course, of newly educated people in the political South since the last couple of decades. But we also need then these institutional frameworks to make it happen. This is just an extra slide for you to look at. After TRIPS, all nations basically have come at par when it comes to the IP protection index. So now we just have to add the trade rules. Okay, so that was the first research document. So we learned something then about these dynamics. And it's much more difficult problem, than any single nation can deal with. And we see that, of course, in the real world. Right? You can always think about the United States, of course, who has done much of this. Also Russia, like in the space race, right? They had this enormous competition. So today China has this high ambitions of working with becoming an intellectual leader since WTO time and so on, that WTO negotiations. So you have these big nations, but then you can think of these smaller nations too, who have then to collaborate. And the point here then is that, well, North-South, and we could NorthSouth Exchange in ideas could really help developing nations in capitalizing on their human capital, right? If we can trade, and that's the challenge you face. So maybe we can work together or do something about this. But I think it's an important task to do. So the second one, this is quite a different thing. So one should take it, as a researcher, you're never happy, right? You're happy when you got the result, but then there are 10 more questions coming up, right? So I wanted to take another go at it and take this dynamics discussion one step further. So we looked here at companies, how they create trust in each other's actions. So this is a very different problem. So because of the high uncertainty of technology and so on, then you want to trust the partners you deal with. Since they do license this $300 billion at least and more, how do they solve this problem? So the trust here is not about the positive or personal trust. It's about impersonal trust. I'll go to that in a minute. Now, since firms have overcome this problem for such a long time, it's worth investigating. So what do they do with their strategies, right? What strategy do they apply, companies, to overcome the uncertainty? So this is a very important slide, or very particular slide. So trust then is not an economic problem. It's a sociological problem. So they have a completely different problem here. The value of the patent, so I'll explain to you. The value of the patented technology is uncertain in themselves, right? You don't know what the value is if you have the technology, but there's something more here. So, for example, if you license for someone, people can keep some secrets. Right? They say, oh, we've got this nice technology for you that we license to you, but in their drawers, they have another technology, and they're going to sell that tomorrow to your worst competitor, right? This happens, right? So you have to somehow trust that they're not going to do that, harm you in that way. Or maybe they're going to hold you up, and they say, yes, we sold you this technology, but actually you need this other technology too to make the first work. And by the way, we have that too to sell to you. So you're held up. You say, what are you going to do? Stuck, right? You don't want those partners. So how are you going to deal with this problem? Right? Or cheat. You just cheat with people, presume, you say, these are really nice, patent valid, we have really checked them on, so on, so on, but they are not valid, they are not worth anything. And that's even illegal to license this kind of patents, but that's possible that people do that. Or people just happen to invent something, right? People invent things. So you have this nice technology, you think this is the best you have, you're really honest about it and so on. But tomorrow you get this even brighter idea. And what are you going to do with that? Are you going to sell it to a competitor? You know? So you have these are a genuine uncertainty. I mean, nobody can imagine this, right? Nobody can imagine what technology some other people in the whole world will invent tomorrow. There's just no way to rationalize it. So, because these are new ideas, it's in the future. And yourself, maybe you can invent something better tomorrow, right? So you have all these uncertainties. So that's the point, right? So these are genuinely uncertain, and the probability distributions can't be made and so on. So this is a sociological problem, not an economic. You have to somehow trust each other, trust in each other's actions, that they're not going to harm you, not going to be mean to you. And before you can achieve that, you cannot trade with them because you expose yourself to all these problems. So what we did here was got a hold of actually 14 companies, 10 of the largest in the world in patent licensing and from different industries, and ask them, what are you doing when you patent and you license, and why are you licensing? And out came a consistent picture. I mean, they all did the same thing. And this is not just the large companies going with the large companies, it's the large moving with the small companies and so on. So you get a sort of picture of the whole thing. And this is the summary. It was not, it dawned after a lot of interviews. So they are doing 4 things, 4 strategies. They're staying clear. They do mutually assured self-restraint. I'll explain this. Marginal transactions, which is sort of the neoclassical economic theory, and they abuse the system. So I'll show you the first one. So staying clear. So you have firm A and firm B. So these are not these are competing in the product market, and they are don't collaborate in technology. So what do? They have these patent portfolios which are slightly overlapping because it's kind of uncertain, right? So how do they deal with this problem? So this is what they do. So firm B then said, okay, I don't want to be sued by this other person, so I'm going to patent something in his area, so in case he sues me, I'm going to sue him, right? And then the other person thinks, of course, the same thing. You know, if he's going to sue me, I better patent something in his area so I can sue him if he sues me, right? So this is a mutually assured destruction. This is the mad strategies of the Cold War and so on. That's what they do. And they build these huge portfolios. And many of these patents then are intentionally overlapping, right? So that they restrain each other. They restrain each other from suing each other. So they are not suing each other, right? Because then it's going to be so expensive, they're going to both lose. So that's how they create this. This is the first strategy. And you have, this is the typically established in mechanical industry, you have the oil industry and so on. And then we have I'll go over them a little bit quickly, and so we come to the conclusions here for this one too. This is it takes maybe some more time to sink in, but this is the way it is. So now the next step, well, we have mutually assured self-restraint. These are other kinds of firms. These are firms who are collaborating. So you have these 4 firms, and they're collaborating with a certain technology. And maybe they collaborate with standards, for example, in the telecom industry. So they create some common fields of standards that they want to work with together. So these contracts are totally the opposite of the first one, called capture period contracts. So what they do is that they agree now that everything that I license to you now in this field, it's yours, and everything new that I will invent in the next period of the contract is also yours, right? So they deal with this problem of that something could be hidden, something could be invented on both sides and so on that could be harmful to me. So now they include everything new that comes in, right? So this is how they deal. So now they can trust each other, right? They're not going to be held up, they're not going to lose out and so on. And this has the first sort of exchange dimension into it, meaning that now you can strategically align, right? Now you don't have to do everything yourself. You can work on your firm B and C, and then you can trust that this sort of exchange of these ideas are beneficial for both. So you don't have to do double work. You actually are collaborating. And the third one here, this is more the marginal transaction. This is like economic theory, which suggests you have these firms, and this is for patents which are well established. You know the value, have been used using it for long, like certain standards of streaming videos or things like that, right? And so now, when the firm B here, for example, needs to grow, they will now tend to infringe on the other side, right? But then they don't want to get into that, so they move up in another direction. Right? So they are really staying clear of each other, and they are collaborating by licensing, or they buy each other, right? So firm A can buy firm B, or you can join with pools, patent pools as they're called. You can pool the resources. So this is more on the margin. This is when things are valued, you know the value. And the last one, which is famous in its own rights, systemic abuse. You have ever heard of patent trolls? Yeah, in America and so on, mostly in America. So these are people who buy junk patents that have no value, commercial value, and then assert them against first large firms because they have deep pockets. And it's a very expensive thing to go about and to assert or to protect yourself from this. So what the response is now, remember this is a strategic response, so what do they do now to defend themselves? Well, they try to run these companies out of business. They say, okay, if you want to sue us, go ahead, and then they spend not $1 million to in a license or something, they spend many $1 million, and they just push these abusers away, because when you get to court, since the patents are not particularly valuable, they cannot get any big deal from these because they don't have it, but they just want to use the patent system court costs to get money from you. So what happens here, the response is then, okay, we're not going to do this, and then they come back and say, okay, we'll give you valuable patents, right? So they sort of structure these. So these strategies then are basically what they do. Now, some more additional slides here. This is an important one. So if we sum up a little bit of this strategy discussion, what is an interesting observation here is that the number of patents you need for these strategies. So to play strategy 1, stay apart, you need like 10,000 patents. You need a lot of uncertainty and overlapping. To strategically align, you need about 10 or 100 times less, 10 or 1,000. And to marginally contract, well, if you have a technology that really works, can go down to 1 or 10, small portfolio. And to abuse, you only need 1 patent, right? So you can just go to court with that. And if you buy thousands of them, then you go to many courts and you make a mess. So you have a sort of low entry barrier to destroy other people's, to rent seek, as we economists say. And it's a very high barrier to really stay clear, right? So this is a policy thing. There should be much more of a level playing field here. Okay, so now the important conclusions from here. Could the economists have gotten it wrong? That's a conclusion for us, economists. So now trade is not only like in hierarchy, like we said. So strategies now that we found here are mutually self-restrained. They all have this feature of it. They all restrain each other to create trust in each other's actions not to sue, and that creates the basis then of the economic and social gains from exchange. Okay? So it's this self-restraint that they impose with the strategies. Now the hierarchy premise, that the economy theory says that inventions and innovations are essentially in the same hierarchy. Most of the economic thinking is like that. And spillovers, like you patent something and then after some years you can learn from it or you can use it, which is a social argument. This premise and most of current policy in this domain appears misguided then, given these strategies. Like economic thought, essentially are based on integrated business models, which was 100 years ago, we had that. This is business models 100 years ago. It's in quotes. Do you see that? This is a quote actually from one of the large companies, so it's not just something I invented here. So these policies are misguided. Apparently, they are not taking into account these gains from trade in these patented ideas themselves. And that's an important dimension for North-South trade in human ideas. Right? So that's why maybe the economists have gotten it wrong. It does not take into account this dimension. And as you saw with these strategies, these 4 strategies is only one that sort of approaches neoclassical economic theory of marginal cost, price should equal marginal cost. There's no marginal cost in having 10,000 patents and thousands of them overlapping. So, and certainly abusing the system is not the same thing. So attempts then that we see today to weaken the system in favor of economies of scale in innovation seems to be then on the rise, and the potential to the demise of the inventive economic activities. And 2, the proposed policy then, that which is then trade in ideas for the North-South Exchange, focusing on that dimension, the proposed policy would then shift some investments, not all of course, some investments from more of the same inventions, building of the existing technologies, to more of the new inventions, paving the way of future technology stock and economic growth. Right? Some money will go into more of the inventive because of this dynamic gains that we discussed. So maybe that could even add about 1%. I made a calculation once on this, rough. Maybe 1 percentage points of growth could be added, shared then between North and South, with increased benefits to the developing countries. So the 1 percentage point is a substantial amount, of course. Specialization then, North-South, to be achieved then by incentives, and this is the policy discussion, by incentives to move then from strategy 1 and 4, the stay clear and the abuse strategy, to this more cooperative strategies of marginal transactions and the capture periods. Right? So they should try to give incentives to this trade. So, and one way to do that is to reduce risk by reducing cost. So taxation should be moderate. Taxation of inventiveness should be moderate or 0. So a new tax-exempt firm is a proposal here, specializing in development and trade is proposed. And the other thing is that for many developing countries, the infrastructure is sort of beginning to develop. So to tying all this together needed for this trade in a tech hub or a tech club could be a way to go forward. So some investments then will shift to the more innovation, away from strategy 1 to 2, and 2 more to 2 and 3, growing then the global technology base with high promising contribution from the South. So this is the conclusion, you can say, of the second study, right? That you have this potential of high promising contribution from the South if we can have rules which gives incentives for 2 and 3. And we have to mention Madame Lagarde, of course, the star at IMF, and Mike Spence, just a little bit. 80% of growth will come from the South. That's her statement. So let's not forget that. Team up with South companies would be, or university would be very good. So this is to sum up both these talks now, we basically said it all. Focus on the institutional policies. First one, move policy, so the mechanisms create this trust, be able to move from strategy 1 and 4 to 2 and 3. And my additional thing is that perhaps then we could add, or I think we should add, to the Doha round item based on the North-South Exchange, not the enforcement that we sort of deadlocked for so long, and then even took it off from the agenda. So looking at it from that perspective, it might be a fruitful move forward. And so that was sort of the discussion. Now, what one would like to do, of course, is that what is the potential of this North-South Exchange in developing nations? And that's the announcement that we just made, that the government of Sweden has just decided to fund such a study. So it's 5 nations initially, and you're more than welcome to contact us here and to see what we can do about that. To begin to develop this. You're all welcome to join. Right? And also, as you know, we economists, we also these abstract ideas around, and we tend to give abstract solutions to every abstract problem. So we want to, really change this. So this is a proof of concept currently discussed. It's actually discussed with NASDAQ, and the idea is to create a proof of concept using high quality technology where these trades can actually take place, to sort of learn a little bit more practically what does this mean in the international environment. And this is also something that's just starting here. And you're welcome, of course, through your Ministry of Trade and Industry, for example, to talk about that. So thank you so much for listening. I hope you got something to think about, and it will be of benefit to the developing nations of the South, and based on this North-South exchange in human ideas. Thank you.
Well, thank you, Eskil, for this very interesting talk, and it was definitely slightly less conventional than the classic trade policy talks we have here. I think Eskil is very much interested in hearing your questions or comments on the talk. So please go ahead. Or maybe to give you a little bit more time, I think one question that came to my mind is that you emphasize here the positive points of patent markets. But there has also been a long discussion about how patents can basically hinder innovation because they attach a price tag to it. This more generally, and then from a development perspective, patents can also be used to transfer profits from the south to the north, because it's very hard to value the patents, so firms can easily use it basically to shift profits. Do you have thoughts on these potential negative sides of
yes.
organized markets?
Sure. So this is a very long discussion with this price tag on patents, right? Now the fundamental point here is that that technology would not be around if there were no patents. I mean, most of it would not be around, because the incentive, there's a profit incentive to own this technology. Because if you invest lots of money to achieve something, you have to have the returns on your investment somehow, right? So it's a fictitious discussion to most points. Theoretical. It's actually a theoretical discussion. This is like the air and the trees, and I think it's not the trade negotiators' fault; it's the economists' fault. Because they have taught everybody that the technology is an externality, but it isn't. It does not grow on trees. At least I haven't found that species yet. So it is this human interaction. Now, how do we humans really achieve that, right? Well, if we want to cooperate without being in a hierarchy, if we want to cooperate with North and South, somehow we have to have a certain ownership to what we do. We can do that, of course, like large corporations, you would just buy the companies, you outsource research. Like the other day, I heard an example of GE. You're probably familiar with this. GE's, General Electric's largest research center is in India. Largest center in the world is in India. And they own this, right? So all the technology, they get it into the company. So that's one way of doing it. But you don't get this specialization. You don't get this startups. You don't get these other people in. How are you going to get them in there? Well, patents allows you for one way. Doesn't mean that they are perfect. They have all these problems with it. It has to be efficient and not so expensive and all these kind of things. But it's mostly, let's look at it, Let's take this question into this study and see if we can find some facts. So, and the other one, transfer profits. Well, I have a very simple answer. It was probably not so popular with policymakers, but it's the answer. Don't tax it. There are lots of theories about it. It's not just me. Miller and all these people. All taxes, corporate taxes, are bad. This is the story. Right? All corporate taxes are bad because it shifts the incentives away from what they're doing, right? So who invented this idea with the corporate tax anyway? So that's the problem with the South-North trans, and I think they will end up in that. And so if you want to tax, you have to tax, of course, governments. You have to tax people. And in the end, that's what you do anyway. So since you anyway tax people at the end of the day, right? Even if it's corporations who get taxed, but that money, shareholders get the tax, and then they pay tax somewhere else. So in the end, it's you and I who pay anyway. So why doing skewing the system? So I think that would be the most efficient way of doing it. Just get rid of this transfer pricing, and then you don't have that problem. It doesn't mean you will not have other problems, but you certainly will not have that one. So these are not, I'm not saying this is a simple thing. I'm just saying that this is a complex thing, and that would probably help in a way the efforts to develop more technology, but not hindering sort of this more efficient use of human resources on the earth.
Any other questions? If not, you have the email address of Eskil here, so he's always reachable and open for discussions. Well, thank you again, Eskil, and thank you all for coming. The policy lectures will now have a summer break, and we'll probably have the next one around September or October. Thank you very much.
Thank you. Thank you.